Happy Tuesday. Did you guys see that news? Oh, went crazy, right? That was fun. How's everyone doing today? Gosh, I'm wound up. I feel good. I hope you guys are doing well, feeling happy, ready to take on the world a little bit. Good morning, Joel. Loved that trade this morning. Absolutely beautiful. Absolutely beautiful. Guys, I was setting up and I was like, man, I'm on simulator. I don't have my live trading account set up for class. Good morning. And I saw this trade set up, guys, and this isn't a high probability trend trade. This isn't something that we talk about every day. But what happened, good morning, good morning. Hey, Bobby T, Safia, Ron C, Claire, nice to have you guys here. Chart reading, guys. You're going to hear me say it a lot. Be a chart reader. When you are a chart reader, you're going to understand where the market is likely to go, where it's likely to continue, and where it's likely to stop. And you're going to be able to use those for entries. Good morning, John Novak. Nice to have you in the room today. Good to have you healthy. Guys, this morning we had news at 8:30. I know that we had news at 8:30 because every morning before I even think of putting on a trade, I go and check the news. I make sure that I'm not trading into crazy news, something that may make the market move erratically. If you were watching the S&P at 8:30 a.m., it looked like a, what do they call those things? A seismograph. Good morning, Sam. It was everywhere. It was crazy. It was unpredictable, right? Was it unpredictable, or was it just too fast to trade? I snapped this picture. You ever go back during news and recognize that the patterns repeat themselves, that the patterns work, that the rules work, even when the market is absolutely nuts, guys? That is 8:30 and 38 seconds. That is two separate trades that fit the rules that both resulted in easy winners. Way too fast to trade. Obviously, nobody's that quick. But guys, the patterns repeat themselves. So I'm going to encourage you to focus on the patterns, focus on the foundation, keep it simple. Learn how to read your indicators and understand that that's going to take you anywhere that you want to be with the markets. Back to news, guys. Every morning looking for high impact, right? Medium impact. Making sure that we're not trading into something that can move the market that erratically is such a big step. And then everything that I talk about today, guys, is going to come from the Discord. It's going to come from the education page, straight from the tutorial section. Good morning, Zeba. Nice to see you this morning. Everything that I talk about, guys, we're going to build a foundation. If you look at the URL for the tutorial section, it says building a foundation. It reminds you that simplicity is key. Excuse me, just one second. It reminds you that you're creating these building blocks of knowledge, right? So that you can move on and do what you want to do as a day trader to achieve that goal of financial independence, not having to go back to work, wake up, grab a cup of coffee, scratch the dog behind the ear, stay in your pajamas, and go make some money. That's the goal. That's what everyone tells me that they want to do. Building that foundation is key, guys, and that's exactly what we're going to do in this classroom. Is we're going to talk about, for the first 30 or 40 minutes, a high probability trade. Good morning, KR. A high probability trade, guys. This is a trade when every indicator on every chart agrees for a trade. Your triggers are the strongest. There's absolutely nothing in the way, no termination conditions, nothing between you and your target. Guys, we've created a checklist to help you find this high probability trade. I'm going to give you a copy of it in the room, and I'm probably going to give it to you about 10 times today, just to make sure that you guys have it. But what's going to happen is our focus on high probability trend trades is going to take us to a medium probability trade. And I do this in a different order every day. I guess it's just fun. And a medium probability trade is when most of your indicators line up for a trade, however a small issue exists. And this is going to be the vast majority of your trades. And when you're executing medium probability trades, you will take these trades and manage them assertively. And if there's trouble in your way, you may take a portion of the position off at that trouble spot, reduce the risk to a zero loss level. Guys, a high probability trade is your foundation. A high probability trade is going to teach you to read your charts. It's going to teach you to read your indicators. And what it's going to teach you is to understand where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. And you're going to use those elements to determine whether or not a trade is present. 90% of what you do during the day is going to be reading your indicators, reading your charts. 10% of what you do is going to be trading, unless it was yesterday, in which case 97% of what you were doing was trading because your charts just kept moving. Yesterday was crazy fun, wasn't it? I hope you guys had a good time and made a lot of money. So we're going to focus on the building blocks. We're going to focus on a high probability trend trade. The high probability trend trade is going to teach us to read our charts. And when we're reading our charts, we're going to look for three things as a brand new user, guys. This is your foundation. I want you to embrace it. If you're brand new, still working on the process of being consistent, this is your plan. If you are returning, looking for consistency, maybe you haven't found it in the past, this is a great way to find it. Guys, this is three simple rules that create three advantages. The advantages are listed in yellow here. A trade equals momentum, a clear path, and an entry area. It's that simple, guys. Momentum, a clear path, and an entry area. You're going to be able to recognize each of these elements through your chart reading on two charts. You're going to use a large chart, the 13-2 chart. Guys, this is going to be your broad stroke of a brush. This will give you the general temperature of the market. This will let you know the trend of the market. If the background is green on the 13-2, you're in an uptrend. Because you're in an uptrend, you're only looking for rules to be met for high probability trend trades long. If the background is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trades short. 13-2 is going to let you identify rules 1 and 2 being true. Strong triggers and no termination conditions, giving you the advantage of momentum and a clear path. Guys, this broad stroke of a brush sets you up for an entry. When the rules are met, we're going to go to a smaller, faster chart. We're going to refine that broad stroke of a brush, and we're going to be able to pinpoint with amazing accuracy where the market is likely to continue. We're going to use rule number 3, using a limit order to buy or sell a pullback inside of favorable large triggers so that we can pinpoint that area, we can reduce our risk and maximize profit potential. What happens in the 1 bar on the 13-2, I love this picture. What happens in the 1 bar on the 13-2 is going to happen on 15 to 30 bars on the 5-1, depending on the fluctuations. The 13-2 tells us which direction we're going. The 13-2 tells us that we have momentum. The 13-2 tells us that there's nothing in the way. The 5-1 is where we're just going to refine that broad stroke of a brush. We're going to identify where the market is likely to continue, and we're going to use that spot to our advantage to enter a high probability trend trade. So if you're brand new, keep it simple. If you're brand new, focus on 2 charts. Guys, we're going to build a foundation. This foundation, the simple trade, repeats itself every day in the market, over and over. If you focus on the foundation, understanding the rules, taking the trades, what it's going to do is it's going to give you a skill set that allows you to make money while you grow your knowledge base, while you continue to learn to read indicators, while you continue to expand and grow as a trader. This very simple approach is going to allow you to be in a position to take trades that win more than they lose by using these 3 simple things. And it starts with strong triggers. What is a strong trigger? Well, a strong trigger means in an uptrend that the small triggers are above the large triggers. The large triggers are widening, they're angled in the direction of the trend. And guys, this tells me that the odds are favorable for the market to continue up. In a downtrend, when my background is red on the 13-2, small triggers are below the large. The large are wide, they're angled, in the direction of the trend. It's the space between the small and the large that let me know that the odds are favorable for the market to continue down. This is your best of the best look. This is the look that should begin the process of finding a trade. When this is happening, we start looking for rule number 2. As those small triggers return to the large triggers, they weaken the large triggers. We forfeit the advantage of momentum because weakened large triggers let me know that anything can happen up or down. So the commitment for the new user is to look for opportunities from that point where the large triggers and the small triggers begin to separate, the small accelerate away, all the way until they return. You're going to look for your high probability trend trade right here in this range. And if you scroll back on a 13-2 chart, you'll see these tails, these wicks, where price has gone below the midpoint of the bar. Guys, these are potential entries on a 5-1. I want you to get in the habit of scrolling back, looking for them, finding them. And what you'll notice is when they happen, inside of that odds favorable momentum, the market tends to go in the direction of the trend. The market tends to go in the direction of the momentum. So rule number 1, strong trigger lines, providing us the advantage of momentum. Is everybody comfortable with that concept? This is the concept that most people can come up with and recognize consistently within the first hour. If I pull up the S&P, and it's been busy since news, odds favorable, right? Everything says up. There's a tail. Let's circle it, and we'll see what happens. Odds favorable, everything says up. Guys, just get in the habit right now. If you see a tail with odds favorable momentum, circle it. Don't worry about anything else. Teach yourself to recognize momentum. Teach yourself to understand when the market's likely to continue in the direction of the trade. Does that make sense, everybody? Give me a Y in the room if you're with me. Odds favorable, I can scroll back and I can look for opportunities after the fact simply by circling tails. That's the advantage of momentum. Rule number 2 says that I have to have no termination conditions, guys. Room to my targets are true. Remember, rule number 2 is happening on that 13-2 chart. So what's a termination condition? Well, it's really pretty simple. A termination condition is just a comparison of areas in those T3 trigger lines. The same trigger lines that give you momentum are going to let you know whether an area is likely to break or likely to hold, or if it has the potential to break. The areas that we're going to use, here you go. Let me show you. We'll use a picture. I like it visual more than just words. The areas that may reverse the market, guys, the divergence high. This magenta line that lets me know that there was a loss of momentum at a pivot at the top of a move. Red Fibonacci resistance. Yellow 1-to-1 dots. Blue Fibonacci support. Or this cyan divergence low, guys. Any of these areas have the potential to stop the market. In the beginning, we're going to keep it very simple. It's going to be a 2-part process that lets you identify an area that is behaving as a termination condition. It's a very simple process. Price reaches the area. Cam and I had to talk about this morning, right? Price reaches the area. If your trigger lines don't break through the area, guys, you've reached a termination condition. You've reached an area that has the potential to stop the market. And while it may not, the potential is there. So the brand new users, guys, this is your safety net. This is providing you the advantage of a clear path whenever this isn't happening. So write it down on a piece of paper if you need to, guys. Price reaches the area. If the trigger lines don't break, no more trades into that area. You've reached a termination condition. Wait for the area to break before continuing to look for trades in the established direction. Absolutely. The picture that I posted, Joel, or the one directly from the manual? Here, let me just share the picture with you. Is that the one you're asking about? I'll pop it in the room. Cool. So that is essentially what this is. Those are the pictures. You can define them. These are the areas that if price reaches and the trigger lines don't break, well, then you're at a termination condition. The rules actually state, they're a little wordier than no termination conditions. They say wait for an area to break before resuming trend trades in the established trend direction with odds favorable momentum. When is an area broken? When both the small and the large get to the other side of the area. So if price reaches support up top, the advantage of a clear path has gone away until both small and large make it to the other side. So I'm going to ask again, guys. I got 3 of you playing along. Give me a Y if you're comfortable. Price reaches an area, no trigger lines break through. We're not looking for that short trade. Both the small and the large break through. We consider the area broken. Now we have the advantage of a clear path. On that picture, large broke on that green bar. Cam, I'm not sure. There's so many green bars. Hey, Black and White Tiger, welcome to the room. Oh, okay. On this picture? Yeah. So here you go. I've got a picture of the picture because that's what I do. It's essentially, I like it. Cam, essentially, let the small break through, let the large break through. Let's go to a chart and look at it. The cool thing, guys, is you can go back and you can make anything happen historically. So let's do a little. All right, so we're looking up top. So Cam, as we come into resistance, and this is for everybody, no trigger lines through. This is an area that may stop the market. So far, so good, right? The market continues up. Now your small triggers have broken, but your large triggers have not. Guys, this is what we call a 50-50. Absolutely. It means that half of your trigger lines have made it through the area, but half have not. That's what 50-50 references. And before we go on, a 50-50 with that odds favorable momentum lets us know that an area has the potential to break, but it hasn't yet broken. So technically, we don't have the advantage of a clear path. The market continues up. And Cam, both small and large are above that area of resistance. That area of resistance begins to act as support. Now I have the advantage of a clear path. And holy smokes, there's one of those tails with a circle on it. Awesome. Guys, the challenge is that we have to be a little patient, right? Cam, are you comfortable here? Price reaches resistance. Trigger lines don't break through. We've reached an area likely to stop the market, right? No go. For the new user, it's no go. And look how price just pushed down right off of that key Fibonacci area. That's what we're trying to avoid. We're trying to give ourselves that clear path, guys. Smalls break through the area, large don't. Guys, this creates a pivot. This pivot has a loss of momentum, and I know that's true because a negative number printed, because that cyan divergence line printed off to the right. This is a divergence low. It's not a termination condition yet because this was our area and the trigger lines kind of broke through. Market pushes up, comes all the way back down, and now we use that process to identify the termination condition. Price reaches the divergence low. Absolutely none of my trigger lines break through. We have what's called a pivot stop out of a prior divergence. Guys, these pivot stop outs become very powerful for reversal points in the market. It means that we lost momentum once, and when the price came back through, it was able to exceed it by a tick or two, but then the powers that be push that market aggressively the other direction. The triggers don't follow. If price trades below a divergence line, guys, then back above, don't take any short trades. It's a termination condition. This termination condition gives us a full reversal of the market. This full reversal of the market gives us odds favorable. Guys, we're going to call this a strong bottom. You'll see it from a top as well. In Black and White Tiger, I know you're new and I don't know if you heard it, guys. 90% of what we do is reading indicators. 90% of what we do is chart reading, waiting for advantages. Price trades to resistance, right? Reaches that key area. Absolutely no trigger lines break through. Guys, I'm sitting on my hands. I don't have the advantage of a clear path. Price pulls all the way back down to support, all the way back down to that mid band. This is a great look right here. My large triggers can't even follow. Look at the gap between price and the large triggers, guys. It's likely to snap back. This area is a termination condition as well. Can't go long, can't go short. Trade all the way back up to resistance, a divergence high, and a second resistance, guys, and your trigger lines can't do a darn thing to get through. Now we have another pivot stop out at Fibonacci resistance, creates a full reversal, gives us odds favorable momentum. Guys, another very key look. And you're going to see this pattern a lot, guys. Great market stopper. Even with these green triggers, notice that we don't have odds favorable. Beautiful termination condition. That's what we call a strong top. And even with odds favorable, and this is the one that's going to get my new users on the first week or two. This is the one that got me. My small triggers are below the large triggers. The large triggers are wide. They're angled in the direction of the trend. I know, because I understand rule number one, that I have the advantage of momentum. Price reaches these one-to-ones and absolutely none of the trigger lines break through. I've reached a termination condition, an area that may reverse the market. Guys, if you were short, this is a great profit target. If you were just waiting for a short, this is a great idea to not look for it anymore because we don't have a clear path. Termination condition creates a full reversal. Notice how both small and large get above resistance, giving us the advantage of a clear path. The smalls are outside of the large. There's another one of those tails, guys. Odds favorable, nothing in the way. There's that pullback on the 5-1, might have been a potential entry. Is everybody comfortable with that, with the concept of termination conditions? You're going to want to go and study them. We're going to call them out all day long as we see them in the live market. But that simple recipe, price reaches the area. If the triggers don't break, brand new users, no trades into that area. As you grow with the software, as your ability to read your indicators progresses, guys, some of you are going to trade into termination conditions, maybe because of where the market is coming from. Maybe because of information that you're getting on all the charts putting there. Yeah, Cam, this was my Achilles heel. This was my biggest challenge as a brand new user with the software. And guys, I've been a new user just like you. Is I love to trade into termination conditions, and I kept losing over and over and over again. And finally, I started posting pictures of every trade that I took in the room, and this is when John Novak taught it. And John Novak told me, he goes, you keep trading into areas likely to stop the market until you're comfortable reading your indicators, Mark. Just stop. And guys, you know that all of these are straight in the manual, right? I've got one more termination condition that I want to talk about. Sometimes the market turns from nowhere. Sometimes you have odds favorable momentum and everything says go, but that market drops 10 points. Sometimes you've cleared the areas, all the trigger lines are through, the clear path is present, and the market just seems to turn. Guys, we're going to use a smaller chart to identify change on the larger chart. This is the only termination condition that I'm going to look for on a 5-1. 3 divergences in the same price range may terminate the trend. And this is a very powerful condition when the third divergence happens with the small triggers inside of the large triggers. What is divergence, guys? Divergence is a loss of momentum. That's all you need to know. The software takes care of everything for you. It does all the math. It does all the comparisons. When you see this negative number, when this line prints cyan from a low, divergence from a high, or magenta from a high, you know that momentum is not following price. 2 times, we can see a slowdown visually. 3 times, it may turn the market. Remember that lesson on trigger lines, guys? Odds favorable, smalls outside of the large, larger wide, angled in the direction of the trend. Even on a 5-1, odds favorable is true. And here, after 3 losses of momentum, we've gone anything can happen. Guys, this may turn the trend. You're going to see this look from a low or this look from a high quite often. When you have this look on your 13.2, those 3 divergences help you identify that change before you see it on that broad stroke of a brush. We also said that when you start taking medium probability trades, you're going to have to manage them assertively. Guys, if this was a perfect entry, 3 divergences let me know that it may be time to take an exit. I can see the slowdown, I can identify it, I can prepare for it, and in the event that that 3rd slowdown happens, my trigger lines are inside, I can take an exit and save my money. Guys, we had a perfect picture of that one this morning. I had odds favorable momentum, guys. There was nothing in my way. I took my perfect entry, and then when that 3rd divergence printed, I was able to get out and not suffer a loss. That's exactly how we'll use it on those medium probability trades. So we're good on momentum, right? Odds favorable. Market's likely to continue in the direction of the trend. And now we're able to identify a clear path using rule number 2, OFM. It sounds like an 80s new wave band, doesn't it? I think I saw OFM play with The Cure back in '87. Rules 1 and 2 have been met on the 13.2. We've got 2 out of 3 of the conditions for a trade. So let's pick our entry, guys. How are we going to refine and pinpoint where the market is likely to continue? Well, we're going to do it on the 5-1. We're going to take that smaller, faster chart. Good morning, Angela. I see your picture. Guys, we go through rules first, and then I go to pictures second. I don't want anyone to ever feel like I'm ignoring you, but I know that I have some new people in here. We're going to lay that foundation of solid rules, and then we're going to go back and take a look at your charts when we're done. And then we'll spend the rest of the day talking about the live market, the trades that you guys are taking, the questions that you have, but we're gonna use those building blocks first. Guys, when you have the advantage of momentum, you have no termination conditions. This is your look on the 5-1 chart. Everything is screaming up. Nothing but green up bars. Large triggers are wide, one on top of the other. Hey, Cal, good morning. I've made the decision. My rules are met. I'm looking for an entry, and I'm going to focus my attention on the 5-1 large triggers. And if they're up and at a blue Fibonacci line, a green mid-band, or 1-to-1s, this is going to be my area to watch. High probability trend trades originate in an area. High probability trend trades have the advantage of fibs, mid-bands, or 1-to-1s as a bouncing point. Guys, the rules say that we're going to use a limit order, meaning that we're going to let the market come to us. And in this case, we're going to buy a pullback. And a pullback is nothing more than a small retracement in price counter to the underlying trend, meaning that my 13.2 is in an uptrend. My 13.2 has momentum. My 13.2 has a clear path. Guys, I'm going to let my 5-1 appear to buck the system, to go against the trend. The large crowd, I love this picture because it reminds us why we wait for that pullback. The large crowd says up. The large crowd says we have nothing in the way. The large crowd reflects the opinions of the market. Well, there's always this tiny little group of yahoos. Guys, you know the yahoos, always fighting the system. That momentum says up. These guys say, I want it to go down. The trend is up. These guys say, I want it to go down. There's nothing in the way on the large charts. These guys say, you know what? Let's give it a push. And they create this retracement, this tiny little pushback counter to the underlying trend. We're going to capitalize on those yahoos, guys. When a reversal bar prints on the 5-1, it signals the beginning of a pullback. Some traders use the drawing tools. There's still traders 10 years in that use the drawing tools to create a window of opportunity. And that window of opportunity extends from the highest point of support to the lowest point of support inside of favorable large triggers. And guys, that's a big part of the equation, making sure that your areas are inside of those favorable large triggers. Favorable large triggers mean that both your large and synthetic on the 5-1 are trending one on top of the other. They're close together, they're compact, and when they are, I'm going to share all the pictures today, guys. When they are one on top of the other and compact, it creates a smaller window of opportunity. I'm going to activate a limit order. You're going to activate a limit order right at the top of that window, maybe a tick or two above the highest point of support, and you're going to sit on your hands and you're going to wait. And if the market comes back to the top of that window, remember, we're at the top because of all the momentum on the 13.2. We're at the top because there is nothing in the way to slow it down. We're going to be in a long position at 79.21 with all those advantages present. We have satisfied the requirements for a trade. We had momentum, we had a clear path, we had an entry. And guys, I'll take this trade 1,000 out of 1,000 times. Because when I take this trade, when my rules are met, when I use my checklist, this is a trade that typically wins 70 to 80% of the time. Guys, there's that checklist right there. I'm going to put this one in the room, and I'm also going to put a checklist that not only has these conditions to be met for a high probability trend trade, but guys, I will say liberated. I liberated some pictures from the user guide to help you understand exactly what they look like. Brand new users, start studying these looks, start studying these conditions. Put yourself in a position to focus on the best of the best. 70 to 80% of the time when the high probability trend trade rules are met, this is your result. Because we wait for the pullback, we can reduce our risk. Because we're coming down here from areas, we've got more profit potential. Guys, this is the trade that I respectfully ask you guys to focus on for the first 20 trading days, for that first 30 days with Nexgen. Because this is the trade, and I'm going to go back, and I sound like a broken record, right? This is the trade that's going to teach you to read your charts. This is the trade that's going to teach you to understand where the market is likely to go. We'll use that for targets. Where it's likely to continue, we can use that for entries. And where it's likely to stop, we can avoid the pain of trading into areas that may reverse the market. Your first 20 days is doing nothing more than studying entries, right? Than making sure that we have the best of the best. When the smalls are above the large, when the large are wide and angled in the direction of the trend, when the market pulls back to an area of support inside of favorable large triggers, right there. You're going to scroll back. Guys, here's your study. We're going to scroll back on the 13.2 and we're going to look for the rules to be met. When they're met, we're going to circle that tail. If we circle that tail and it lines up with the areas inside of favorable large triggers, we know we have a high probability trend trade. New users, give me a Y in the room if you're with me. Please and thank you. I know that this is a lot on day one, isn't it? Here's our circle. Odds favorable, nothing in the way. Guys, there's a pullback directly to support. The market goes up 5 points. And then we get a second divergence. And my trigger lines are now anything can happen. And it ultimately pushes lower. This would be an easy way to make quick profits, that second divergence. Your chart reading allows you to recognize that it may push lower, and it does, right to support. And then we get one of those pivot stop outs on a smaller chart, and it pushes it even a little bit lower. Guys, this is your entry, opportunity for exit, and then you go into patience mode. While this is your best of the best high probability new user trade, this is the one that I saw right when the market came through. I can see when the momentum is no longer against me. I can see when my trigger lines turn. I can recognize when the market's likely to continue direction and take advantage of it on the way up. One is a high probability trend trade. The other one is a trade based on your ability to read charts. If we scroll back just a little bit, the smalls make it through, the large don't. Still pulls right back to an area of support inside of favorable large triggers. So everything that we do, guys, is about patterns that repeat themselves. Everything that we do revolves around your ability to recognize this stuff in the moment. Would you guys like to do an entry? Should we do a bar by bar entry? Make sure everybody's up to speed with what we're talking about. What do you think, guys? All right. So let's take some noise off, because your first 30 days, your first 20 trading days, guys, is focused on the best of the best, right? And I'm going to show you something. Here's an example plan of what we focus on in the very beginning. I'll put this in the room for you. The only thing that you're worried about for your first 30 days, guys, is entries. Getting in at the best of the best spot. Because when you take a great entry, it makes easy management. When you have odds favorable, when there's nothing in the way, guys, this is when it becomes easy. So when these rules are met on the 13-2, smalls below the large are turning, they're beginning to angle. Give me a Y in the room, guys. Do you see it? There's that odds favorable momentum coming through. I need you guys to let me know when it's okay to go to rule number 2. Do I have odds favorable momentum? Absolutely, right? How easy is that to recognize? I don't care if you've been here an hour or a year. That's the easiest look for you to grasp. Has the market reached an area? That's how you're going to ask yourself the question. Has the market reached an area? If it hasn't, well then don't we have the advantage of a clear path? Now I have momentum and now I have a clear path. So far so good, guys. That's 2 of 3 rules satisfied. So let's turn our attention to the 5-1. What are we waiting for on the 5-1, guys? Our rules say that we're going to use a limit order to buy or sell a pullback. What's a pullback? Well, a pullback starts with a reversal bar. Is everybody comfortable with that? Your pullback on the 5-1 begins with a reversal bar. We haven't activated a limit order. We haven't even identified a window of opportunity yet. We're simply waiting for that small group to say, we're going to give it a push up. We're going to fight the underlying trend. Guys, when you get the reversal bar, draw a box from the top of your triggers to the bottom of your triggers. From the bottom of these large triggers to the top of these large triggers. And then your window of opportunity is that lowest point of resistance to the highest point of resistance. Guys, we've just identified the point where the market is likely to continue. Let's put a line in. 2 ticks below resistance. This is where your limit order is waiting for that market to come. Can I get a Y in the room? Odds favorable, nothing in the way, reversal bar prints. Here's our window of opportunity. Guys, your mid band is a moving average. It's moving down. As that market pulls up, your mid band moves down. It's okay to adjust your limit order down a tick to make sure you don't trip over a couple pennies as you're chasing dollars. The market comes back, and look at that. You're in an order. You're in a short trade with the advantage of momentum. You're in a short trade with the advantage of nothing in the way. And you're in a short trade having entered at the area where the market is likely to continue. Your initial stop will go outside the window, guys. Once this reversal bar prints, your stop is about 2 ticks above it. We're in a trade with approximately 3 ticks of risk. And there it goes. Is it just me, or would that be a fantastic way to start the day? Guys, this is your first little bit of time with the market. I just want you to be able to identify, oh my gosh, Black and White Tiger. My brother and I go back and forth on Skype, and we're like, there's another, there's another, there's another. Guys, this pattern repeats itself all the time. Your job is to develop the trust, right? To develop the ability to recognize this in the moment so that when the market's moving live, you know. Right here, we already knew that we were looking, right? Cam, not at the beginning of the large triggers, at the area inside of the favorable large triggers, right? We want that bouncing point. So short trades, Cam, let me show some pictures. And guys, entries will take you into the inside of the first week. If you embrace the plan, they become pretty easy. The window of opportunity, Cam, is from the lowest point of resistance to the highest point of resistance for a short trade inside of favorable large triggers. You can see here that the only line is a mid-band, right? We're not worried about these one-to-ones because these one-to-ones are outside of the large triggers. Price pulls back from the top of the triggers to the bottom of the triggers. Cam, do you see how it is the mid-band? No, 10KM, I took them off. We just did a little exercise looking for entries. So for the sake of the exercise, I got rid of all of the areas and we really just focused on that great momentum. Just kidding. We changed everything, 10KM. You're going to want to talk to tech. No, not really. It's just for the entry lesson. At the time of the reversal bar, guys, you're going to circle or square from the top of the triggers to the bottom of the triggers. And don't be sorry, 10KM, ever. So Cam, your window is from the highest point to the lowest point. Your order is going to go a tick or two above that highest point for longs. Your order is going to go a tick or two below that lowest point for shorts. We're going to ignore the areas that are outside of the windows. And guys, that's your place where the market's likely to continue. There's another long from the top of the triggers to the bottom of the triggers. And it's nice, isn't it? When your window of opportunity is one line wide, when your window of opportunity is a couple ticks wide, those stacked triggers make it smaller and smaller, guys. There's another one showing both. Rules met. There's your pullback. Cam, you can see that the triggers are pretty wide, right? But your window of opportunity is small because we use those areas. Did that clarify a little bit, Cam? You gonna start nailing those great entries now? Yeah, you are. I think you're already nailing them pretty well. So guys, that's it. That's your high probability trend trade. That's your best of the best. That's a trade that when you follow the rules, when you have the advantage of momentum, you have the advantage of a clear path, and you have the advantage of an entry area, typically wins 70 to 80% of the time. Guys, that's not going to be the last trade, right? Triggers include both the large... Well, Cam, when we're talking about entry, which chart does the entry come from? 5-1, right? So when I'm talking about trigger lines on the 5-1, there's two triggers. There's the large triggers, the smooth. Those are the 5-1 large. Your synthetic triggers, the one that are stepped, these are actually the 13-2 large. We want them stacked one on top of the other. Hey, Bobby, have a great afternoon. Great trading this morning. Nice job. So, Cam, we're looking for those to work together, right? Stephen F., those are small swings. So Cam, when these are one on top of the other, it makes that potential area for entry smaller and smaller. Here you go, Stephen F. Here's a little picture of the math. So does that make sense, Cam? Technically, we kind of are using the 13.2 and the 5.1, but we're only using them on the 5.1 chart. Guys, how do we feel about termination conditions? Price reaches an area. No trigger lines go through. New users, you guys trading on hope. Who took a long at the area of support inside of favorable large triggers without the advantage of a clear path? Odds favorable, but we reached an area. No trigger lines through. Guys, this is a picture that you're going to want to remember, right? Didn't that just keep us out of a loser if we're following rule number 2? Your rules are designed to give you an advantage. Your rules are designed to put you in a position to avoid these losers, right? Exactly, Claire. Because what happens? Guys, if I take 3 perfect high probability trend trades, and let's just say that I make 300 on each of them, that's almost $1,000. That's $900, right? But then I trade into a termination condition, and I lose 200 of it. You're welcome, Stephen. I hope that clears it up. They're like the big ones, just on a smaller time frame. And then I trade without the advantage of momentum, and I lose another 200. And then I forget to trade from an area inside of favorable large triggers, and I lose another. And guys, I let those perfect trades dwindle down through breaking rules. And I see that a lot. I see people making money on these great high probability trend trades. And then I see them giving it right back by breaking the rules because they start to feel a little invincible. Focus on the best of the best initially, guys. Focus on nailing those entries when the rules are met. And it's going to put you in a position. It certainly does. Your ability to read your charts, guys, takes you to the medium probability trade. When most of your indicators line up for a trade. See how I circled back to this one after we've built the foundation? However, a small issue exists. Guys, your ability to read charts will identify that small issue. This will be the vast majority of your trades. And when you're executing medium probability trades, you're going to take these trades and manage them assertively. Remember this one? Your ability to read your indicators is going to allow you to manage assertively. If I enter at the mid-band and 1-to-1s inside of favorable large triggers and 3 divergences print, I know to exit that trade. I've let my chart reading see change on the small chart. If I take this medium probability trade, I know that this divergence low is my first trouble spot. I can take profits here. I can say to myself, all right, get to break even. I can manage out of a trade. So guys, nobody in the history of Nexgen has only focused on high probability trend trades for the entirety of their life. I promise. I've never seen it. But the flip side of that coin is I've never had somebody stick to this checklist for an entire week and not do less than 75% winners. Create a foundation. Embrace the repetition. And know that it's going to take you anywhere that you want to go, guys. Your step to becoming a confident trader ASAP is 2 key elements. Post your trades in class. Everything you do, guys, I want to see, especially if you lose. I don't judge you on your ability to read your indicators because you're all brand new. I want you to post your trades in class, and then, guys, take advantage of the spreadsheet. Nexgen's given you a performance and progress spreadsheet. The first tab is where you're going to put everything that you do, every trade you take, every time you take a trade, it goes into this spreadsheet. Here's the best example of a page 1 I've ever seen in my life, guys. Every trade that was taken is in the spreadsheet. a single adjective to describe how she felt getting into each and every trade. Whether she broke her rules, whether she jumped in late, whether she followed rules. Notice that when the rules are followed, relaxed, confident seems to be the way it goes. And then any extra notes, the after effect. Maybe targets worked, targets didn't work. Guys, this is your path to study. You're going to recognize patterns in yourself. You're also going to recognize patterns in the market. And when you post those trades in class, I'm going to recognize patterns in you. Guys, I have the burden or the gift. I'm not sure which it is. I love it, Cam. I don't forget things. It drives my wife nuts. But if you post 10 pictures in the room, guys, I'm going to find a pattern in you. Black Tiger, if you've just downloaded, and I know that you're on a demo, right? I love Black and White Tiger. What a cool name. Look in Nexgen Study Picks. You should have a folder on your desktop. And it should be right in there. And if you go to your search bar and you just hit 90, it'll probably bring up, whoops. One of your first hits will probably be your 90-day Nexgen worksheet. And then if for some reason you can't find it, which is okay, here's a link to it. You can download this Google document and put it on your desktop. Use this every day. And Black and White Tiger, you don't know me, but I started my journey with Nexgen about 2 years ago. In January of 2020, I had my second spine fusion, took me out of my given profession. My brother wrote the software. My brother is the CEO of the company, and he's been trying to get me to do this forever. Well, I finally did it. And he told me, and it's kind of funny, he told me 3 things when I started. He said, I want you to post every trade you take in my classroom, Mark, so that I can see what you're doing. And I want you to use a spreadsheet, and I want you to take pictures of your perfect entries. To which I lovingly replied to my older sibling, go to hell, John. That sounds like a lot of work. I'm a Novak. I'm good at what I do. I'm going to be just fine. And I wasn't. After about 30 days, I went live. Cost me about $5,000 over the course of maybe an accumulative 12 minutes of trading. And then I came back and I started the process. And I teach you guys the same process so that you can avoid these pitfalls. Use the first page. Track everything you do. Get those patterns. Yep. And then under my personal favorite looks, guys, every time you take a picture that fits the rules, do I have a picture that fits the rules? I think I probably do. Every time I take a picture that fits the rules, put it in the green section right here so you can go back and study it. And then finally, under client trade examples, guys, there's about 70 pictures of high probability trend trades there. I take these pictures for my personal spreadsheet. Here's my personal spreadsheet. We're up to almost 115. Guys, I steal these from you in class. Every time that you take a picture and post it in here and the rules are met perfectly, I pilfer that thing. I put it in here so that I can come back and study it. If I click on perfect high probability trend trade, this is probably from a day or two ago. There's the checklist telling me that the rules are met. There's the look that I know provides the winners more often than not. And there's a beautiful entry right at support inside of favorable large triggers. The patterns repeat themselves every day, guys. It's up to you to do the study so that you can recognize the patterns. I'm giving you every tool you need to do it. The only thing you have to do is post in class, ask your questions, pretend like this is your own personal private session, because it is. And you'll be good. Any questions, guys? Feeling pretty good? Brand new users, it's like drinking from a fire hose day one, isn't it? I can tell you that Nexgen's plan has been consistent for the last 20 years. It revolves around letting termination conditions be true, wait for a roll in the market, and look for your entries. We focus on number 3 here. We focus on the highest probability trend trade, so that all you have to do is take that base knowledge and grow from it. That's the plan. That being said, something happened somewhere because if Paul and Luciano are posting, there was probably a good trade somewhere. Guys, I'm going to take 5 minutes. I'm going to go grab a glass of water real quick. When I come back, we're going to start looking at your pictures. I'll leave you with the S&P here. And then we're just going to look at your charts. We're going to watch the live market. We're going to talk about what we see right there in the moment and move forward. I want you to ask a million questions, guys. Keep me busy today. I'll be back in just a minute. All right, off we go to the second hours. Looks like we got quite a few pictures in here. I like it. So guys, I'm going to scroll up to the top of the day when we started. I'm going to take a look at the pictures that are posted. This is always my order of operations. Just so you guys know, let me scroll the or slide this over real quick. When I am going to your pictures, I hope you can see that, I have to scroll all the way up, which means that if you ask a question in the moment, I might miss it. If for some reason I miss your question, if you don't get the answer that you need, let me know. I'll always backtrack, but I like to come through and take a look. And guys, I want to start. Joel presented a picture in class. So we're going to grab Joel's picture, and all we're going to do is we're going to say to ourselves, what are the rules? What are you doing? How's it going? And of course, it's not coming up. Is it a Snagit issue? Or Joel, did you delete it? Are you hiding it from me? Let's try a different way. There we go. Like this, though, it's a little blurry, which makes it difficult for me. I'm going to try one more time with the screencast link. Thumbnail's good. While the screencast is spinning, guys, is the market coming from a good top or bottom? Joel says yes. I can't tell. Does he have odds favorable momentum on his 13-2? Joel says absolutely. Here we go. Took it a second. Let's make it so we can see. Joel says absolutely. I've got odds favorable momentum. Small below the larger wide. They're angled in the direction of the trend. He has no termination conditions. Doesn't this look exactly like the one that we did together as a class? Do you see it? Same look, isn't it? Odds favorable, nothing in the way. Joel waited for his reversal bar and he put his order for entry a couple ticks below the lowest point of resistance inside of favorable large triggers. He took quick profits on the first one, beautiful profits on the second. Joel, this is the best of the best. What a great looking trade. Ladies and gentlemen, if you focus on this look right here, notice that Joel put not a 50-50 trade. Not anything in the way. No chance of not having a clear path. Joel, that's perfect. Joel, was it effortless when you did that one? Did it feel easy? Were you confident? Because what I find is that when people take these trades that fit the rules, their confidence level goes through the roof. They're like, oh my gosh, that trade went to the target almost instantly. That trade was so easy and effortless to take. I wasn't anxious. Odds favorable. Bobby's already gone, but we'll look at it anyway. Small's above the area, the larger not. He recognizes it as a 50-50. The market pulls back. He takes his entry. When he takes his entry, he takes quick profits on a medium probability trade. The market pulls back again. 3 divergences in the same location. Beautiful trade. Medium probability trade. Ron learned how to read indicators, and Ron says, well, I believe in odds favorable momentum so much that when I have odds favorable momentum and a clear path, I'll take a momentum style trade all the way up to where the market is likely to stop. Guys, Ron has developed a plan based on his ability to read charts that's a little different. It's a little different than a high probability trend trade, but Ron's trade is Ron's trade, right? Hey, Gersa, nice to see you. Good test. Joel, I want you to remember how effortless that one was. Sorry, I just scrolled down and saw that you said yes. It doesn't have to be difficult, guys. It doesn't have to be nerve-wracking. You just have to be comfortable and confident in what you're looking for. Let's see where we're at. We just did Ron's. Scroll on down. We'll take a look. All right, Cam puts, I love it. Cam, guys, this is how you annotate charts. I want you to see this. Cam's talking about everything he sees. And this is 1 of 4 on simulator. Cam says, here's a termination condition that creates a full reversal. Small's above, and Cam, there's a little bit of a gap there. He takes the pullback to an area inside. Cam, remember that gap may pull all the way back. So this is a medium probability trade that you're managing assertively. But from a good termination, when everything says up and an area inside of favorable large triggers, this thing just rockets right in the direction. Absolutely beautiful. You've got your target up at the 1-to-1s. Guys, this is an order of operations. This is 3 trades in a row. Showing exactly what he did, talks about how he managed it, where his stops were, how he felt going through it, what he's looking at from a profit loss. Cam, this is how you get great at what you do. Take those pictures, annotate those charts, repetition every day, right? Going through, making sure, this is what I see, this is why I'm doing it, these are my advantages. Good morning, Tank. Cam, great job. Guys, the more pictures you take, the easier this becomes. True story. The more pictures you take, the easier this becomes because you're building repetition. Scrolling up to the next pictures. That was Joel's. That was Cam's. Guys, I love to see this. Bobby T at 8:07 a.m. Eastern says, you know what, Mark? I've already reached my goal for the day. There's no reason to hang out with you guys. I love it. Absolutely love it. That's the goal, isn't it? Cam, once again, odds favorable. We talked about how you did reach a termination condition, right? Right to the tick. Guys, sometimes your pictures become great lessons about what you're doing on the chart reading. You tell me what you see. We talk about what was actually happening. You missed your entry and then missed that 50-50 entry. That was a beautiful entry though, right? You know what's awesome, guys, is Cam didn't take the trade. He missed it. And it does. The better the annotation, the better I think everything goes. The more information you put on that chart. And Cam didn't catch either of these trades, right? But Cam still said, this is a great trade. This is a great trade. And Cam's setting himself up to not miss these trades next time. Cam, you appear to be the teacher's pet today. I like it. Great pictures, great annotations. Great opportunities for everybody to learn from what you're doing. Here's John Novak's first trades of the day. John Novak says odds favorable, no termination condition. He takes his entry. Exits at the trouble spot, gets out break even, waits for everything to roll, takes it right up to the fibs. You know, this one was a lot of fun for me. I wasn't in front of the computer on the first trade. You guys, this is what we call a continuation style. This is a trade that when this trade gets stopped out, or maybe you manage out of the trade, waiting for everything to roll, looking for that opportunity to go. It's always fun for me because my brother and I got the exact same entries. The rules are the same, but it always feels good when you see that it's a validation. My rules do work. My rules are great rules. I trust my rules. Because I trust my rules and because they're easy to follow, easy to repeat, I'm going to see a lot of other people taking the same trades. I hope. Thanks, Cam. All right, let's see what we have. Sam. All right, Sam. So you wrote rule number 1 on there, right? Odds favorable momentum. What rule are we missing on there? Guys, how you annotate your charts tells a lot about where your brain is. And it helps me out. Sam, price reached a fib and a divergence high. Small triggers broke through and the large did not, right? So what do we call that? It's a 50-50. So what I like to do, and guys, this helps you, right? Write each of the 3 rules on there. You know that it's a 50-50. So Sam, is this high probability or medium probability? It's a medium probability trend trade, which means that we really want it perfect over here. So for the brand new user, and let me praise a lot though, you did have momentum. Look at that window of opportunity. Great job, great entry. I love it. And this is an area with the potential to break but hasn't broken. We don't have the clear path. So Sam, what you did is you took odds favorable. Was it from a good bottom? Let's see if I can move that. It's not, uh-oh. There we go. Yep. We're coming from a termination condition that creates a full reversal that gives you odds favorable. You have strong triggers. You have a tiny window of opportunity. Sam, I think you took almost the best shot you could at a medium probability trade, and it just didn't work out. The one thing that I do see though, Sam, can we talk management? And this will help you. I love medium probability trades, guys. Most of the trades I take are medium probability trades. Sam, when this reversal bar prints, especially on a medium probability trade, it's all right. Get that stop a couple ticks below it. Get knocked out at 38, not 31. That $70 goes a long way, doesn't it? Saving that $70 5 or 6 times a week, man, that adds up. That's $1,500 a month worth of doing that. Yeah. So when you get that reversal bar, especially on a medium probability, get that risk down. Manage assertively. It's right there in the glossary of common terms. Medium probability trades need to be managed assertively. Beautiful trade. I love everything about it. I think you had a lot of advantages there. That medium probability trade just didn't work out. Angela, let's see what you're doing. I forget, you always reverse your charts. You had odds favorable, 50-50, right? You take the perfect entry, quick profits. That second divergence, Angela, says that we may push lower. And it does, and it gets you. It's okay to go break even on a 50-50 on a medium probability trade. A second lower divergence with the smalls inside, it's probably going to push beyond that break even. Nice trade, Angela. Well done. Great read on the small. I think it was a wonderful job. Got another one from you. Odds favorable, no terminations. I like this because this is a 50-50 at a potential divergence low. Angela, this is the best entry ever. No divergence, strong triggers. Area at the entry inside of favorable large triggers. You take quick profits and you take your second profits at the trouble spot. Angela, would you be okay if I grabbed your screencast link and went to my spreadsheet? I want to keep this one, guys. This is a medium probability trade. This is perfect execution. Doesn't it make sense to steal it so I can study it, so I can be as good as Angela one day? Does to me. Thank you for that, Angela. Guys, remember, even though it's Angela's charts, if you have questions, ask them. Don't be afraid to ask questions. This is very much a public forum. Let me see where I'm at. Angela. Here we go. We got Paul. Paul says 50-50, loss of momentum. He says 50-50s with the loss of momentum. He'll take it at the bottom of the window of opportunity. Doesn't look like you took that one, Paul. Maybe you did. Nice chart reading. Coming through, Ron C. Waited for the fib to clear. Got in, got out at the next trouble spot. Ron, I love your style. I'm going to play with it on sim a little bit. Sam user. Let's see what you did, Sam. 50-50. You were stopped out on a 50-50. It happens, doesn't it? Sam, did divergence print coming into that 50-50? I can't see your entry that well. You have a window of opportunity. You also got stopped out right at the bottom of that window of opportunity. Did they all have divergence? So what are the common threads? I'd love to see your entry here. I'd love to see the whole thing. Well, no. Well, the fib is the bottom, isn't it? Oh, yeah, that could be the problem too, Sam. You're trading the wrong contract. Daniel, good eyes. Sam, the S&P has rolled over to the June contract. So you're probably trading a lot less volume. So what you need to do, are you comfortable rolling? Go to Tools, Instrument Manager, and I want you to type in ES and search. And it's going to bring you that contract up, most current. Click your left arrow. Yeah, roll over that contract. That was Daniel. That wasn't me. Daniel, good eyes. Thank you for that. That'll definitely help. But Sam, I want you to go back and I want you to look. What were the common themes on your 50-50s not working? Was it divergence pulling into it? Was your stop in the right place where the market shouldn't go? Miss Angela, you have a 50-50? All right, so let's go through this. Angela, are you with me? We definitely have a 50-50, right? And those smalls are returning to the large. Not the best look. So we're losing momentum a little bit on an area with the potential to break. I think this is such a key factor here. Where are your small triggers on that pullback? Do you see how they're already inside? Your 5-1 is already anything can happen. Yeah, that creates a problematic scenario. But do you notice here on the first 50-50 when there wasn't divergence, it pulls right back to the area of resistance inside of favorable large triggers, continues all the way down for 3 points, and then that divergence gives you a management opportunity. Your entry would have been a beautiful exit on a 50-50 trade with those triggers inside. Do you see it? Does that make sense? 50-50, no divergence, perfect entry. You got in the management opportunity. And guys, this is very real. When you miss the best of the best, sometimes you go after the one that isn't so good because you feel like you just missed out on something. You're like, oh no, it is going to go. I better jump in. Your ability to read charts are going to help. Man, I've been there, Angela. That is not me being judgy. That is me going, thank God it's not just me. We've all done it. But what happens is you get to a point to where you start reading your indicators so darn fast that this becomes like almost instinctive. You're like, oh, wait a second. I'm losing momentum. It's a 50-50. The area hasn't broken. And divergence? No, I don't want that trade. Giving away too many advantages at that point. Gary, let's see what you got. Gary, trying to anticipate that breakout. The smalls are starting to break above, but the large, they're not quite there. You do get in at the best of the best area. It's very small risk. Gary, I think it's a good shot. But why bother having that 21-3 chart if you're not going to use it? Can I ask that? I see this a lot, guys. And this isn't just Gary, but I see this with a lot of people. They want more charts. They want to come through. They want to see all these things. Why on earth trade into a termination condition with weak triggers? Especially when this chart gave you divergence from beyond the outer bands, and that chart's not perfect. How many things, guys, more charts is just more information, right? More charts is just more information. If I'm trading off of 2 charts, Ziba, do you mind if I open them and see if there's lessons for us? And then when you get back, let me know. I'll take a look at it. On 2 charts, guys, it's a good-looking trade without the advantage of momentum that's managed perfectly. And then if you add those other charts, you begin compounding problems. Great job, Gary. I think your management was awesome on that. Zeba, I'm not sure where I am in the order. Just let me know when you get back. We'll come back to you. I don't want to skip over people. All right, Paul. Guess you didn't need the re-entry. Nope. All the same reasons. Paul, I see you're using the 13 range. Do you see a big old antenna bar with a reversal sign and a pivot stop out beyond the outer bands? There's a lot going on there. Remember, guys, if you're going to have all that information, don't be afraid to use it. And if you're not sure how to use it, and Paul, I'm not saying that you're not sure how to use it, but if you're uncertain about what that extra chart does for you, guys, it's just going to create a problem. Luciano, everything says down 50-50 on the divergence low. Perfect entry makes for great management, doesn't it? Perfect entries make it easy to manage the trade. Luciano, nice trade. Angela, odds favorable, clear path, perfect entry, first target in, keeping the stop where the market shouldn't go. Beautiful. Oh. Can we talk about Angela's chart real quick? Angela? You're letting the 13-2 lead the way. Guys, remember that a high probability trend trade, all charts agree, right? On a high probability trend trade, this is just your entry chart, isn't it? 2 divergences aren't a termination condition. Angela, you let the 13-2 lead the way. You broke the areas, you had a clear path, you had odds favorable, and like a rock star, you used your 5-1 for entry, and your 13-2 got you to the target. I love everything about this picture. Nice job. I get excited when I see you guys going for those bigger moves because the 13-2 said so. Not because you hoped it would go, but because the 13-2 said so. All right, Zeba, I'm going to hold off on hers till she gets back. So that brings me to Safia. Let's see what Safia did today. Safia loves those termination conditions. Rule 1 met, Rule 2 not. Perfect entry gives her an opportunity to manage out of the trade. Safia, nice job. You did trade into a termination condition. Whoops, hold on. You enabled it 50-50, which I like that you did. Am I missing this, though, Safia? Price reach support, no trigger lines broke through. That's okay. Not bad, because Safia, let's talk about it. Beautiful entry, right? With all that momentum, it came down and retested. It's not a high probability trend trade. I love that you put 50-50 over it. But don't great entries create manageable trades? But Safia, you also had 3 divergences in the same price range. You might have gotten a little lucky on that one. You know what, Angela, it's no problem. You do your charts how you like them, and I'll work through it, I promise. Yeah, so you actually had double termination conditions. All that momentum gave you a push. So Safia, today's lesson for everybody is that strong triggers sure help a trade, don't they? Sometimes strong triggers will cover our mistakes. They've covered mine quite a few times. And the thing to worry about on this one is it didn't come from a good top. It didn't come from a Fibonacci area. You will. Sophia, you and I are like peas and carrots. That was my trade every time. See how it's not from a good top back here, though? We didn't come from that Fibonacci area. I'm going to respect that mid-band and support down here just a little bit more because we're not coming from an area. I think it's a great picture and wonderful lessons. Nice job. Let's see where we're at. Guys, I love looking at your pictures. This is fun for me. I hope you're learning something. If you have questions or comments, don't be shy. Luciano, odds favorable. Everything says up. No divergence. Pull back to support inside. Luciano, I love everything that you're doing here. I don't think that you needed market flow confirmation without the divergence, strong triggers, everything. That's one of those ones where I'm at the area without the divergence. Because even my small chart's not suggesting a slowdown. And then there it is again. Gary says no divergence, missed it. I agree. Good to go back and get that read though, right? Sam. Yeah, that's okay, Sam. Sam, this was you, right? Triggers straight up? Okay. You know it's coming, right? All right. I'm going to do something real quick, Sam. I just want to show you something. Triggers straight up. Is that a rule? Here's triggers really, really flat. And here are triggers just absolutely vertical, right? Not a rule. What is a rule? Odds favorable? Odds favorable? Man, that's the rule. So guys, be careful when you're annotating your charts, because what you're going to find yourself doing, and this is a great example, because I did this too. I would write what I wanted it to be, not always what it was. Hey, Zeba. Not odds favorable, right? Again, perfect entry. You gave up the advantage of momentum twice. Well, 3 times if you look at your 8 range. Perfect entry, stop where it should go. You felt anxious because of the prior large run-up and expected bigger retracement. Sam, I love that phrase. You said, man, I felt anxious. Not because of what the indicator said, but because of how I felt, right? If you trade off of how you feel, you're in trouble. Believe me, I know my opinions are some of the most expensive opinions in the business. What if you simplified it? What if there were only 2 options for you when you read your charts? What if it was rules met or rules not met? What if the only thing that you gave any credit to was whether or not your checklist was met, whether or not your rules were met? What you're going to find is that if you focus on execution and not opinion, life gets easier. Keep it simple. Sam, great picture. Beautiful entry. The only thing is you gave away the advantage of momentum, and because you did, it pushed a little lower, right? You managed it perfect. Nice job. But the momentum wasn't there. And guys, when the market moves that far without you, we start getting a little angsty. We start going, oh, I just want to be in. I feel like I missed out on some money. I need to make sure that I get paid. All right, Zeba. Termination condition creates a full reversal. Full reversal gives odds favorable momentum. You take the pullback to support right there at those favorable large triggers, and you make some money. You didn't remember what has happened? So Zeba, did you have odds favorable? You did a great job. All you have to remember is whether or not the rules are met. Write down whether or not they're met. That's a beautiful trade, Zeba. You had the advantages. Let's look at the next one. Ooh, it's going slow today, isn't it? Here, Zeba, I'm not sure where we're doing this one. 1405, right here. Odds favorable, it's a 50-50. All right, are you with me, Zeba? That's okay. 50-50 trade, right? At a divergence low. Smalls are through, large are not. Do you see it? Let's click a little bigger. This is our area. I'm lining up timestamps. So I have an area with the potential to break, but it hasn't broken. And then I get that divergence on the 5-1. You're going into a medium probability trade and you're losing a little bit of momentum. I think this is one that'll win about, I don't know, 30 or 40% of the time, but not always. Not enough to feel good about it as a new user. Divergence on a 50-50. Your entry, though, beautiful. And guys, if you miss one little aspect, but you nail your entry, celebrate the victory. Because remember that great entries make for manageable trades. Odds favorable, pullback right to support inside of favorable large triggers. Zeba, beautiful job. A little late on the entry. You freaked out when you saw the market was going out, but decided not to cancel and wait. That's okay. It's going to come against you a little bit. And then everything rolled. Nice trade, Zeba. Had you gotten in at 48, it might have gotten you. Your best entry was up here. You were late and it worked out in your favor on that one. Zeba, nice trading. Your entries are getting better and better every day. Your ability to recognize the advantages is getting better and better. Odds favorable, no termination. Looks like you got in. Nice entry. First target hit. 2 divergences print. The second one is lower. The small triggers are inside. It's okay to go break even. When it closed, you lost everything. Yeah. Put your stops in place. So Zeba, when you get into the market and this reversal bar prints, just slide your stop up. Click on it and put it below that reversal bar. And then you don't have to rely on that close button. Let's see if maybe from the instructions, let's go to ATM, Trade Management and Chart Trader. Awful lot of videos in there. Yeah, and you will get slipped because you're not nearly as fast as a computer. Here we go. Zeba, there's a video. This is trade entry and management techniques. This is going to talk a little bit about being able to use those stops, being able to use those targets. Go through and practice a little bit. You're welcome. You're doing great. Guys, you're not going to see it in yourself the way I see it in you. I see all of you guys moving forward all the time. All of you guys making progress. Remember, you're probably not going to see it the way I do because you're right there. You're focused on what you're doing. Joel, we talked about that one earlier. Absolute rock star. Nice job. Safia, let's see what you did. Odds favorable. No termination conditions. You got in at the top of the window. Stops in place. Lower divergence. You took an exit. I like it. Is this a 50-50, Safia? How do we define a 50-50? Let's go through. Guys, this was your 50-50, where the smalls are broken and the large are not. That's a beautiful trade. No divergence, strong triggers, tiny window of opportunity. Great opportunity for a long there. Guys, give me a Y in the room if you see it. I know some of you took this one. And then Safia, that's just a high probability trend trade. You have the advantage of momentum, absolutely nothing in the way. Your stop is in place. Divergence printed, and you were... I'm not sure why your stop was right there. Okay. Safia, this was your 50-50, right? Smalls are through, large are not. No divergence, pullback. That was a beautiful entry. But you didn't take this one. So this one, odds favorable, no termination conditions. You get in at the top of the window. And your stop should have been right here, right? Below that reversal bar. And Safia, this is the management lesson for you. And this is really a management lesson for everybody. What does the 13.2 say? 13.2 says odds favorable momentum, right? 13.2 says clear path. You already got your entry, you've already established your risk, and you've already got profits in the market. So Safia, your small triggers are up, your large triggers are up, your synthetics are up, you have odds favorable on the 13.2, you have a clear path on the 13.2, and you have approximately a point's worth of risk, right? Our two divergences, and this is how I go through it in my head. Our two divergences a termination condition on the 5-1. Safia? Cam says no. So let's go to the rule book. Guys, I love pictures like this because the entries are easy. They really are. Getting into the market is easy. It's going to take you a while to read these in the moment. So Safia, we're looking for 3 divergences in the same area. Cam was today years old when he learned that lesson. 3 divergences in the same area might terminate a trend, Safia. So when I look at your picture and I only see 2, but my rules are met perfectly, high probability on the 13.2, these 2 aren't scaring me yet. My stop's in place. With this much momentum and a clear path, I'm going to make them come get me. Does that make sense? Because I don't even have a termination condition here and everything says up. And it takes a while to get good at this. And let me find... Here's a great example. Yeah, you were putting your stop. You put your stop right at support inside of favorable large triggers with the rules met for a high probability trend trade, didn't you? That's very common. I've done it a million times, and I don't think there's anyone. Where were you moving your stop to? Or let me ask even more so, why were you moving your stop? Because you didn't want to give any money back, right? Okay, so you were going to put it at break even? You're going mechanical? Perfect. Then Safia, that's perfect. Exactly the way you should have done it. So then the management lesson becomes, where did it go? I think it was Angela's. That's essentially the same look, isn't it? Isn't that beautiful? Odds favorable, no termination. So Safia, here's your next step. And this will be a great management picture for you. When the 13.2 says go, the second divergence doesn't. No, there's not. You've got to stay aware and into your trades. There may be a way to do it. I don't know how. because I want to be in control of everything. I'm a little bit of a control freak, maybe. So the same thing. When the 13.2 says go, there's nothing in the way. That's my cue to keep my initial stop in place. But if you're doing that very mechanical, then you executed perfectly. Absolutely perfectly. Black and White Tiger, how we doing? Welcome to the classroom. Gary, almost a 50-50. Divergence prints. I guess the smalls made it. Bad top, straight into support, straight into a mid-band. Divergence prints. Gary, that's the where's it coming from scenario, I think. Not coming from a great top. Yeah. That's that one afterwards. You're like, oh, wait a minute, right? That's okay, Gary. Good effort, good management. Let's see where we're at. Andy Trader. Nice to see you this morning, Andy. Let's see if I can open that picture. There we go. I love it. Andy says, when I have odds favorable momentum and nothing in the way, I'll get in at the area of resistance. A little early on your entry, Andy, but very well done. And from the looks of it, and Andy, tell me if I'm wrong, it almost got to your entry point and then it started to tick down a little bit, so you entered. You got in at the 1-to-1? Okay. Areas inside of favorable large triggers. I see what you did there, though. It's a nice trade, Andy. Good job. Great read. When the 13.2 is perfect, guys, it's amazing how things work themselves out. Gary, we just saw this one. Luciano, 50-50, divergence prints. Gotcha. Medium probability trade, divergence printed. Joel, 50-50, divergence prints. Joel, did you opt to skip that trade? Market flow showed on 8 range. I gotcha. Using that extra chart for a little extra giddy up, Andy. I like it. Joel, did you skip the 50-50 with divergence? I don't see an entry on there. Joel again. Let's see what we have. Odds favorable, no termination conditions. Oh, it missed you by a tick. Remember, guys, that mid-band's going to move, isn't it? Hey, good morning, Christina. Nice to see you. Joel, so 2 parts. First part, great job sticking to your plan, not being enticed by that siren song. The second part is, remember, it's okay to move that entry a couple ticks above because, Joel, you're giving yourself the best of the best, man. You're giving yourself odds favorable, nothing in the way, smalls outside of the large, tiny window of opportunity. Oh my gosh, that's everything, right? Don't be afraid to spend a tick or two to make sure that it gets you. Great read, Joel. I know it's frustrating when it doesn't come back for you, but I want you to celebrate what you pulled off on those last 2 pictures. Gary, let's see what we have. Gary, odds favorable, nothing in the way, perfect entry, and it just gets you. Guys, I'm going to take this picture of Gary's, And I'm going to go to my spreadsheet, and I'm going to put this picture into my spreadsheet, and I'm going to label it Gary's perfect high probability trend trade didn't work. Why would I do that? Why would I put a loser into my spreadsheet, guys? Because it has the advantage of momentum, because it has the advantage of absolutely no termination conditions, because it has the advantage of an entry at an area inside of favorable large triggers, and absolutely, Cam, anything that typically wins 70 to 80% of the time is mathematically obligated to lose 20 to 30%, which means that when I take this trade and it doesn't work, I have to be okay with that. I have to be okay with that cost of doing business. And Gary, I would take this trade every day, every time, wouldn't hesitate. I probably wouldn't leave my stop way up there after a reversal bar because it's already told me what I need to know. I might lose 5 or 6 ticks on that one. Probably wouldn't go full loser. Great trade, Gary. I like everything about it. And I think that if everybody in the room was being honest, you would find an awful lot of people probably took that trade with the exact same result, and they just don't care. Safia, let's see what you did. Everything says up. You waited for the mid band because of the divergence. I like it. It came to the bottom of the window of opportunity. You left your stop in place. I hope that one worked out for you, Safia. It's a good-looking trade. Paul, exact same trade, right? You missed a couple, and then you took a loser on a great look. Great entry, stops in the right place, higher divergence. You let it take you out. Paul, perfect trade. Guys, it sucks to lose, but losing is a very normal part of a positive equity. John Novak says, when everything says up, when the path is clear, 2 divergences on the 5-1 typically result in a pivot stop out. He knows this because of his chart reading. Beautiful entry, easy profits, 0 risk. John Novak putting on a clinic lately. And then, Paul, you said that you're moving targets due to emotions. That happens, right? Take a deep breath. It's not a loss, it's a lesson. Amen. Paul, perfect entry, right? Profits. And then you didn't want to risk it. I've done it. I've done it. Guys, moment of honesty. My most detrimental, my most tragic flaw as a day trader is when I adjust my management plan. When I change it based on how I'm feeling. Paul, you had everything on this trade saying that it was going, but a couple losers changed your approach. Totally normal, totally natural. It happens. If you recognize it, write it on the chart. Take a deep breath. Christina, really? Are you going to keep doing this? We're going to have odds favorable momentum. You're not going to have any termination conditions. You're going to have room to the target, and you're just going to keep getting in and making money. That one appeals to you, doesn't it? Some people like chocolate. Some people like vanilla. Guys, some people see this trade all day long and take advantage of it. Some people, it doesn't click. All you have to do is build the foundation, right? Odds favorable, clear path. And then the entry's up to you. You're going to figure out what works for you. Christina, beautiful work. You're going to have that new computer soon enough, right? We all like cash. Gary, strong up. 2 divergences, perfect entry, right? It's okay to skip it. Divergence small inside of large, totally okay to skip it, Gary. Good chart read. If it doesn't meet your rules, guys, don't take the trade. Oh, and see, there you go, Christina. This is your opportunity. Yay, I get to teach you something. With all the momentum, you hop in. Remember, momentum in, momentum out. Divergence is a loss of momentum, right? Is a loss of momentum. If you're going to take a momentum style trade, respect that loss of momentum. That's about the only thing I think I could tell you on that one. And then Claire, weak top, strong bottom. So you say, I'm going long. Beautiful trade. I love it. Where's the market coming from? What a great question to ask yourself before every trade. I have a 50-50. Where's it coming from? Is it coming from a strong top or is it coming from a weak top? I have a termination condition that just created a full reversal that gave me odds favorable momentum. Well, absolutely. I'll take this trade and take it to the next level. Claire, great job. Good read. And John said he decided to stay in against third divergence. He's got 0 risk. He's got an uptrend. He's got odds favorable. He has an area of support likely to hold. It's already been tested. His smalls were up. Everything's up. We'll see if it pays off. Guys, you know what the most important factor is on this one? Is he already got paid? He has absolutely nothing to lose on this one in a market where everything still says up. The advantages outweigh. The advantages on all his other charts outweighed the problems that he saw in his 5-1. There's that third divergence. Pulls right back to the mid-band, and it looks like it's continuing on its way. John Novak, strong trading. Good chart reading. Look at that, guys. We made it through all of your pictures, didn't we? Nice job. A clear path goes a long way, guys. Clear path helps a lot. Everybody's going to have a different management plan. What a great place to ask ourselves, where are we coming from? Are we coming from a strong bottom? Or are we coming from a weak bottom, guys? Do you see it? We're not coming from an area. This isn't a termination condition. It didn't create a full reversal. The small triggers haven't made it through this area yet. Divergence is printed. What's the likelihood of success? When up here, I came straight off resistance, everything was down. If patterns repeat themselves, this one has a better shot of coming back and retesting 73.41 than it does hitting 74.88. Just knowing that little bit. Maybe this is your trade, maybe it's not your trade. What do your rules say? Are your rules met or your rules not met? So that's what we're seeing in the market right now. Give me a Y if it makes sense, guys. Not coming from a good bottom. If you took the short, it gave a management opportunity. We've pulled all the way back to resistance and absolutely none of my trigger lines have broken through yet. I'm already witnessing one loss of momentum. And this market may go up for days. But I've given away the advantage of a clear path, especially coming from a bad bottom. So we can play if-then. If everything continues to move up, I get odds favorable, no termination conditions, I'll look for a high probability trend trade. Are you okay letting a trade go if your rules aren't met? That's what you're going to ask yourself. Guys, the hardest part about being a day trader isn't recognizing the patterns. You'll have the patterns down within a week, won't you? It's doing nothing when you don't have advantages. It's sitting on your hands when your rules aren't met. And guys, the worst part is watching it go where you thought it was going to go when your rules aren't met. Can you work through, can you trust your rules enough? Can you trust your ability to read charts enough to be okay with what happens after your rules aren't met? That's the hardest part. There's a fear of missing out, right? There's a fear of being left behind. That's the hardest part for traders. That's the hardest part. It's not the patterns, guys. Odds favorable is easy, isn't it? No termination conditions, let's be honest. It's easy. Price reaches resistance. My small triggers can't break through. Guys, that's a textbook termination condition. The question is, can we not take this long because the rules aren't met and then be okay if it goes all the way up to 74.16? That's going to be the challenge for you guys. Let's see what the S&P is doing, guys. John Novak, bingo. Everything set up. Every area was up. The areas had been cleared. There was a clear path. Every trigger line says up and is through the area of support. If you took the long at the pivot stop out, you could have gone break even and held this one all the way to the fib. Third divergence is higher, not lower. That's a little bit that helps. If you managed out after the third, that's okay. You still made money, right? And now we're into an area with the potential to stop the market. Now we go through the process one more time. Let's wait for the rules to be met. Don't you think somebody else knows that this is a problem area too? Look how it's stuck. Somebody else knows that the market could either go up or down here, and they're stuck waiting. Guys, we have the ability to recognize patterns that repeat themselves every day to keep us on the best side, right? Just sit and wait. There we go. Who got stopped out of there maybe long? Patterns, guys. John Novak used to teach this class, and I would take this long trade right here, and he would say something like I just said. Well, the market's more likely to finish the move from a bad bottom with nothing going through to find 73.41. And I swear I thought he had a crystal ball. And I would get stopped out, and I'd be mad at him for making the market move. But it turns out it's just patterns. And John Novak is going to teach the class on Monday, guys. He's going to say all the smart things, and then I'll come in Tuesday and fix what he breaks. You guys curious about market flow? Monday is your day. You guys curious about catching momentum style trades? Monday is your day. Guys, I'm going to take a few minutes. Let's see if this pattern works itself out. And then we'll get back to that final hour. Last hour belongs to you guys. Questions, pictures, we'll take care of it. I'll be back in just a few. Guys, this is the voodoo that John Novak used to do that just absolutely floored me. How did I know 20 minutes before that happened that that's probably what was going to happen? Guys, the market repeats itself every day. Give me a Y in the room if you see it. Isn't that amazing? That long looked good, didn't it? The odds favorable looked good, didn't it? My chart reading, my ability to recognize patterns through repetition, I guarantee there are some traders that probably went short on this little pullback right here and took it all the way down to that next area. Your ability to recognize patterns is going to create huge advantages for you. Your ability to go through over and over, to take these pictures, to know what you're looking for. That's our goal, isn't it? Take pictures of those patterns over and over. What do you guys want to talk about? That was crude oil. What's your S&P doing? Man, look at that termination condition. All the way back to support, all the way back to the mid-band, right? Large triggers didn't follow. Let me know that that short was probably going to get run over. Safia, how do you manage this one? Sure. I love this one. So your best entry, right? So let's look at a couple patterns. Whoops. And you know I'm going to mark it up a little bit because that's what I do. Whoops. So as always, we're going to start on the 13-2. Got a strong trending market. It's not odds favorable, but you see those dashes on the small triggers, on the large triggers? That lets me know that we're in, nope, it's not. It's not, Safia. What is a 50-50? A 50-50 means that the small triggers are through and the large triggers are not. Don't be sorry, it's okay. There's a lot of terms, right? You're going to get confused every now and then. Safia, this is 100% clear path. So what we have on the 13-2, on that one that sets the tone, yeah, these are all says up with a clear path. That's what my 13-2 tells me. And let me go to, we'll come back to it. What you're looking at when those small triggers ride the large like that. Awesome, Ron. Good job. When those small trigger lines ride the large like that, Safia, and this is probably going to be a new lesson for you, we still have momentum. It's a strong trending market at this point. It's not odds favorable, but this is still a really good look if things look good on the 5-1, and that's exactly what you had. Is we had that good trigger look. Are you comfortable with that? And guys, this is a new one for you, isn't it? Cool. But you have a clear path, don't you? 100%. Every trigger line is above support. So, Safia, this is my next way that I think about this. Based on what I know about termination conditions, if price pulls back and reaches the area and all of my trigger lines are above, doesn't just the simple laws of termination conditions say that this is an area likely to stop the market? You wouldn't go short into it, would you? And I'm piecing all this together for a reason. So I know that 39.59 is a great area. The market's trending strong up. All of my triggers have cleared it. This is an area likely to stop the market if price pulls back to it. Your first divergence didn't give you an entry. If you didn't catch that entry, that's okay. Do you recognize this as a pivot stop out? And guys, this is for everybody, not just Safia. Paul did a great job annotating this on his entry. We have two divergences. It's a pivot stop out. One of the common things that you're going to see, Safia, is a pivot stop out can create a pivot stop out. John Novak entered the market right here. Paul entered the market right here at the pivot stop out at the lower end of the window. Are you with me so far? Pivot, two divergences, takes out the previous pivot. That takeout spot is right at a mid-band inside of favorable large triggers. If you weren't already in the trade, Safia, that's your spot. Comfortable so far? So how do we manage it? First target, that higher divergence is an awesome first target, right? I love it. And at that point, when that first target's reached, because of the strong trending, because of the clear path, because support had already held, I love the idea of maybe break even below the area of support inside of favorable large triggers, risking a tick, maybe break even, and saying with all of this, with everything pointed up, with everything above the areas, it's likely to hit that next fib. Let it dance a little bit. It's hard to let it dance. Your brain's going to tell you, get out, get out, get out. They're coming to get you. They're coming to get you. And then John Novak uses, yeah, it does. It's totally normal. John had the advantage of a 21 chart that had odds favorable momentum as well. So he used that as a little indicator. Notice that he's not risking anything. He's below the window of opportunity. He's already taken profits. So here's everything that I just said. That's exactly what John Novak did. Yeah, and you have to be willing to lose when you get in and when you choose to stay in. And you have to be consistent, guys. And that means that you have to have a plan in place. Nice segue. I'm going to put this in the room for you guys. And there's your little recap for the day, everything that we do, right? You don't, Safia. You have no, that's not a stupid question. You don't know, right? We never know what the market's going to do. I don't know if it's going to go up. I don't know if it's going to go down. But what I do know is that when all of my indicators suggest up, it's got a better chance of going up. Yeah. And Safia, true story, if you exited on that third divergence, that's great. Here, and let me show you. What do you think about this one, Safia? Odds favorable, everything says up. Do you know where I entered? At the pivot stop out after the second divergence. Do you know where I exited? At the third divergence. That's what my plan says. I made $110 and this trade went right to the fib. How do you do what? Get out on the third? Hit close. Divergence prints, hit close. How easy is that? But you're going to fight your brain because your brain's going to say, keep it open, it might go. Safia, your rules say No, because you're already in, right? You're already in, your stop's already reduced, so now you just have your finger on the close button. Watch this. If divergence prints, I'll hit close. If you're on 7, Safia, this divergence will be true 2 ticks below the reversal bar. I can put my stop right there. And there you go. John just did a video for it as well. Thank you, John. Is it just me, or is it amazing having the guy that wrote the software in here helping out? Safia, did that answer your question? I think that the key is having a plan, right? The key is really just having a plan. And in the very beginning, let's go back to the one that we were looking at. Let's go through this one, guys. And this is for everybody. If you're brand new, this is especially for you. And John and I wrote this one weekend. We were talking back and forth. Like, how do we sum up the path into one page? And this is exactly what we did. And I'm going to open a lot of these so that we can just kind of bounce through it. Oh, and if you want to download it, or you can just click and drag. I put it in the room as well. John, I did the same thing. That's okay. So guys, to minimize your learning curve, doesn't everybody want to do that? You want to minimize your learning curve. You want to get to where you want to be as quick as possible. Post pictures of your trades in class. Every trade, win, lose, or draw. If you win and the rules are wrong, you may have short-term victory, but a long-term failure. How will you know the difference? To be sure, you need feedback from us, and it's definitely us, guys. I'm here 15 hours a week live. John Novak hit his goals early, so now he's going to be in here for the last hour, probably throwing in some wisdom. But you have a support group, guys. If you place a trade on the simulator, you participate in class, there's no risk of loss or capital. You need someone to tell you what you did right or wrong when you're new. That's all it is. You just need someone to walk you through the process, and that's part of the educational magic that we offer. I love that he called it magic. Guys, we are committed 100%, 15 hours a week, live, to give you feedback on anything and everything that you do. The only way that doesn't work is if you don't present what you're doing. Use this outline for education, guys. Post in class, use the spreadsheet. You have to learn your trigger lines for when it's okay to trade. That's what class is for. Simulate. Don't practice the wrong trades. Simplify your plan. Right, Joel? Simplify. Make it easy. Market replay. Practice, practice, practice. Take pictures of the correct trades. Repeat the process every day until you always take the correct trades. Populate your spreadsheet using the checklist. Use the checklist. Make sure that you're following your rules. Whoops. Annotate your charts, guys. Make sure you write your rules on your charts, right? Make sure that you know why you did what you did. Study historical chart setups. Use the pictures generated in class. Grab them from the Discord channels. Create at least 15 images a day. Guys, 15 images a day is 300 pictures a month. At the end of 90 days of study, you have almost 1,000 pictures. Don't underestimate the power of it, guys. Present those pictures in class, annotated with your checklist. Insert your trades that follow the rules into your spreadsheet. There it is. Every rules-based trade gets put into your spreadsheet. And then When you've defined your entries, define your management plan. And initially, it never ends. Do the hard work first, build the foundation, get those building blocks, and everything else works out. Define your management plan. Initially, a mechanical approach that eliminates emotion or opinion. Aren't we all full of that? And then, Joel, you'll notice the better you annotate them, the quicker you learn. A mechanical approach that eliminates emotion or opinion tends to be the most straightforward approach for new users. You can alter your plan after you're done with the education. If you take 2 contracts, the initial stop will be 12 ticks, adjusted below or above the window of opportunity. Your stop will be moved 2 ticks below the reversal bar in the direction of your trade. Profits at the first target of $100. Profits at the second, $200. Moving your stop based on mechanics, break even if then, rather than on emotion. Get in at the best spot. It makes it manageable. Your stop is where the market shouldn't go. Your targets are already established. And guys, there's nothing to do once you enter other than wait. Once the reversal bar prints, did I skip one? Once the reversal bar prints, I lower my stop above the reversal bar. My targets are still in place. There's nothing to do. It either gets my target or it stops me out. My first target gets hit. I go to break even. No opinions, no fear, no anxiety. And either my second target gets hit or I go break even. Guys, this entire approach is put together for you in one sheet of paper. Read it every day until you believe it. Allow yourself a minimum of 30 to 90 days to practice the mechanical approach to a checklist-based entry. Guys, your entries are going to come to you within the first week. Your management's going to take a little more time because you have to learn to read your charts. You can adjust your targets based on your experience later. Do I still have people listening? Give me a why if you're okay with this plan, guys. This plan says keep it simple. This plan says take advantage of the tools provided. And this plan says quit trying to hit home runs as a new user. Let it be mechanical while you learn to read your indicators. And now, annotating is teaching. Amen, Cam. Here's the hard part. Are you ready? Accept that you may be a less capable of a trader than you initially believed. Everyone feels entitled to win. Guys, I felt entitled to win. I thought that the market owed me a lot of money because my last name was Novak. But the only people that win are the people that trade well. And you trade well when you have a plan, when you have rules that have been proven to win more than they lose. But when you think you're ready to go live, guys, use a prop fund. Go to Apex, Top Step. I don't care which one you use. They don't pay me. But what you can do is you can trade OPM, right? Other people's money. They're going to put you through a test that makes you say that you're ready, that makes you say you're consistent, that makes you say that you're not blowing out accounts. And the cool thing is when you pass their test, they're going to give you a live account to trade. They always run sales. Guys, I'm controlling $100,000 worth of an account for $44 a month right now. And starting out, use their money too, right? Oh my gosh, surrender to the process you have. You'll thank us later when you realize what you do not yet know about yourself trading live money, guys. Finally, when you can make money in a real-world setting with someone else's money, trade your own with their funded accounts. Remember, there's no penalty for being cautious when you start trading live. The actual harm comes from thinking that you're a better trader than you are blowing out a large sum of your capital. Guys, we put this together because what we found is that people get excited about going live and they're typically not ready. The average user isn't ready right off the bat. But we think we are. I did. Cost me $5 grand instantly. Guys, if we had something like Apex the first time I went, I would have been out $300 to $600 instead of $5,000. Awesome, Cam. And Cam, you're so close, right? You're so close. Keep track of everything. Guys, this is your plan. These are the keys to the kingdom. You guys ever heard that phrase, the keys to the kingdom? These are it. Not all of you are going to put the key in the lock and take advantage of it. But this is it. And if you're not nervous about going live, you're not ready to go live. Guys, there's a pucker factor with live money. It doesn't matter how comfortable and confident you are on simulator. The second it's real, you got to work. Odds favorable, right? 50-50. Can't I, in just a moment's notice, identify the top of the window of my opportunity in the event that I get a reversal bar? Is it a high probability trend trade? Not so much. It's a medium probability trend trade. I've already got one divergence. I've got the potential for a second. If this second divergence prints, it's a pivot stop out. If it's a pivot stop out, I know it's probably going to take out that previous pivot. If it takes out that previous pivot, well, that puts me right at a mid-band inside of favorable large triggers. And if for some reason I take this trade, I know exactly where my stop should go outside of that window. Do you see how I talk through everything? I have odds favorable momentum. I don't have a clear path, but I have the potential for a clear path. I'm recognizing momentum over here. I've identified a window of opportunity. I'm creating expectations if then. Guys, that's just chart reading. That's all that it is reading my charts and making an educated decision about what I'm willing to do based on what my indicators are telling me. And that's exactly how fast the process is going to go for you when you start getting good at it. Same process, right? Strong triggers, strong triggers. My large are halfway through now. If I get a reversal bar, I've identified my window of opportunity, right? From the highest point of support to the lowest point of support. Guys, that's all I do every day. I read my indicators, I wait for advantages, I respect termination conditions. And you know what the thing that stinks is sometimes the market will go from a beautiful termination condition straight to a termination condition. Market didn't come from a good bottom. It finished the move. And then the sellers gave up and let the buyers take over. Guys, that's all this class is. It's not telling you to take trades. It's not telling you to get in the market. It's not telling you how to trade. It's helping you build a foundation. And based on that foundation, you can make educated decisions about whether or not you're willing to risk your money on a trade. You're going to write your rules. And when your rules are written, you're going to take every trade that follows those rules, right? If the reversal bar prints, my first target's at 100, right? Let's mechanical this one. Let's see if it works. It's a medium probability trade. Look at that entry. First target hit. I'm already at break even, guys. Nothing bad can happen to me on this medium probability trade. So now it either goes to my second target or it comes back and gets me break even. That is the most mechanical, no anxiety, no stress, no worry, absolutely nothing going on. There we go, got me break even. Is anybody mad about $100? It'll probably still go, but I don't care. I'm mechanical, right? I'll take pictures and I'll determine. Guys, if I make $100 5 times a day, that's $500 a day. That's $2,500 a week. That's 10 grand a month. That's $120,000 a year. Cal, my large triggers come from my 5-1. My synthetics, these lighter green, are nothing more than the 13-2. It's just the 13-2 large triggers. In order to have a trade, don't I have to have odds favorable momentum? It means that these have to be up and strong. So these better be up. No way. I like your goals. And Cal, what we know is that when these two trend one on top of the other, it creates an advantage. So if you're super mechanical, you're already out of this trade. You already made money. If you're taking a different approach, if you're saying, well, I still like that the small triggers are outside, and I know that there's a divergence, well, then you may still have stops in place. That's up to you. Paul, I don't know. You could. What changed on the 13-2? Nothing. What changed since the pivot? Nothing, right? I just happened to take an entry. My first target happened to be meet, and my mechanical approach said, this is it. Paul, where does this divergence have the potential to push it? The potential. That's your potential. Doesn't mean that it will. So you've probably still got 6 or 7 ticks of risk on this one to be where the market shouldn't go, right? But this still says up with odds favorable momentum. We've only had this divergence. The triggers are way outside. Is there anything on any chart that suggests this market's going down? Not a thing, right? We did mechanical because we talked about mechanical. Paul, where's your first trouble spot? 72.50, right? What if we get another divergence and the triggers are inside? So you keep asking all these questions while you're in the trade. My conditions haven't changed on the 13-2. I've only got the one divergence, and I don't have divergence potential here because there's no negative number flashing like there is on the 13-2. I've already gotten reversal bars. I've already established my risk. I've gotten a second reversal bar. So I've got 4 ticks of risk, and I'm willing to risk that 4 for the fib. Or if divergence prints, maybe I get out. All I'm doing is talking my way through it, right? All I'm doing is saying, this is what I see. This is what it means to me. This is what my plan says. And this is how I'll manage a trade. Guys, give me a Y in the room if you're with me. Ron, have a great afternoon. Always appreciate you being here. Do you see how I'm talking through it, though? I'm not saying, oh shit, I hope it goes up. Holy crap, the small triggers are down. Egads and little fishes. I'm so worried. All I'm saying is that this is what my 13-2 says. This is where the market was likely to continue, and absolutely nothing has changed since the time I got into this trade. If I'm mechanical, I'm out at break even, right? If I'm not mechanical, I'm probably still in this one. My first trouble spot is 72.50. What a great place to take my first profits if I'm going to do that. What if a second lower divergence prints? Ron, what if a second divergence prints? Well, Safia, I'll know 2 ticks below that reversal bar marker. So I'm at break even at this point, guys. I either get out break even because a second lower divergence prints with the small triggers inside, or there's not a damn thing for me to do until it hits this fib. Does that make sense? Guys, we're talking through two separate management scenarios. One that's very mechanical, one that requires chart reading. One that says take profits, get the heck out at break even. I'm not sure, Safia. Looks like you have a native fib on the 5-1. That's all right. They're in the right spot, aren't they? I appear to be missing a native fib. You have a fib that I don't. Doesn't change anything though, does it? There's a down bar. Am I panicking or am I waiting for divergence to be true? My stops break even. Guys, this is where, there's divergence true. Can I hit close and get out of the trade? It's up to you, right? Some people say, well, shoot, everything is still going. I'll keep my initial stop of 2 to 3 ticks, and it got hit. But do you see how you can read your small charts? You can take this information and you can start to gauge your reaction, not on emotion, but on what your indicators say. Guys, you have to be able to read your charts to do this, don't you? You have to be able to read your charts. And then when the third divergence prints, you may say, you know what? I'm done. Because it's still a 50-50. Some of you will work your way into other time frames. And if you're using an 8 range is pretty ugly right now. That's not offering any help for more up. And if you're using a 21-3, well, a 21-3 is weak triggers. That's not really offering a lot of help up. I feel pretty good about my $100. And I feel even better at recognizing change on the small chart and not sitting and hoping. Guys, when I take a trade in class, it's not to show off. It's not to do anything more than to try and give you a real-world example of how you can go through this thought process. I kid you not, when I take a trade, guys, that is precisely what's happening at my desk. Is I'm talking through what are my advantages, what are my disadvantages, what does this chart say, what does that chart say? Does it make sense to stay into a trade? Does it make sense to exit a trade? I did. I got a guy in Chicago. I said, hey, I need a 50-50 that fails, but I need to make sure you give me multiple divergences on the 5-1. Isn't that pretty amazing though, guys? I'm a chart reader. I'm not a day trader. And I can tell you that my heart doesn't race. And it's probably scarier doing this in front of a live audience because there's always some Yahoo that says, oh, your trade lost, you suck, your stuff doesn't work. And I have to deal with that phone call. I have to deal with that email. But that was 100% chart reading, guys. That was identifying advantages, identifying problems, making a decision based on what my indicator said rather than what my gut said. Trading is like golf. Yes, it is. I love that. Walter Hagen, I expect to make at least 7 mistakes around. So when I take a bad shot, I don't worry about it. It's just one of those mistakes, guys. Mistakes happen. Too much watching the small chart. Everything set up, odds favorable. Even the small triggers rolled, right? And that's the one. Didn't get that divergence. It just pushed it down to the large triggers, to those synthetics. Beautiful entry right at the synthetics. Let the 13.2 lead the way. Let the 13.2 lead the way, and make sure that there's reasons. Really, John, this was your day? The best you could manage is $7 grand? Where's your win percentage? 80% winners, guys. 80% winners. 7 grand. Divide that by 4 though, right? Your average trade went down with that mistake. Guys, don't try to be John Novak. Try to be a chart reader. Because that's all John Novak is a chart reader. He looks at his indicators. He makes an educated decision to take the trades, to manage the trades. And even someone with his skill set makes a mistake. Joel, perfect entry. Odds favorable, 50-50. 50-50 on a divergence high. One divergence pence, great entries, make for manageable trades. Smalls inside, second divergence. Don't thank me for the help, Joel. That's all you 100%. I never tell you guys what to do, ever. I tell you guys how to read your indicators so that you can make decisions. That's all it is. You're making the decisions, not me. I'll never tell you guys to enter a trade. I'll never tell you guys to exit a trade. I'll never tell you how to manage a trade. But I'll look at what you've done and give you my 2 cents. It's important that everybody knows that, Joel. So I don't get in trouble. Man, I watched a lot of golf this weekend too, John, and the pros do make triple bogeys. They just don't make them very often. You know, I realized that my golf game was finally getting on its way. I don't triple like I used to. I used to triple 3 or 4 holes around. And now if I triple once, I'm almost a little surprised. That's good. It's a progression, right? But it took me a while to get there. I know you didn't, Joel. We're okay. Every now and then I got to throw that little legal disclaimer thing out there. Guys, we've got a little bit of time left. What would you like to talk about? What's on your mind, my friends? Guys, Cameron Stewart just sent me a friend request in Discord. You think I should accept it? Sam, just curious to know what profit goal do people keep in general on a pair of contracts for the day? It depends on you, Sam. What do you want to make? My goal. Awesome. How to set? Well, Cal, you're in charge of entries and exits. But if you're using limit orders, is that what you're talking about? He is a great guy. Sam, you have to determine. My goal is $400 a contract. Every day, $400 a contract. Yesterday I hit my goal and I shut it down. There you go. And then I also define, Sam, how much am I willing to lose? And my exit plan, or my loss plan, says that I'm willing to lose $300 a contract. And that gives me the opportunity to take 3 perfect high probability trend trades. And if 3 of them lose in a row, then I'll just shut it down for the day and I'll go to sim. But I have to make sure that I followed my rules, right? So I'm not willing to undo all my hard work chasing trades. But I had to define that. I had to define that. So Cal, we use limit orders to enter and to exit, right? And then NG, I'll get to yours. So we use limit orders. If I right click on my chart above the highest or the price, my first option is sell limit, Cal. And if I click on sell limit, it says if the market reaches this price, I anticipate it going down. Obviously, that's crazy in an uptrend. If I right click on my chart below price, my first option is buy limit. And that says if price pulls down to this limit order, we'll make it happen just for grins. Then my anticipation is that the market's going to go up. So we're going to use those limit orders to get in and out of the market. Right click above price, it'll give you a sell limit. Right click below price, it'll give you a buy limit. And then if you need to move it a little bit, Cal, you can click on the line, put it anywhere you want. And when you click a second time, it'll go to where it was. Same thing with targets. If I buy the market right now, if I want to move my first target, I can put it anywhere I want. If I need to move my stop, I can put it anywhere I want. Guys, this isn't a trade. I'm fighting everything, right? If I break my rules and need to get out of the trade, just hit that close button. Does that help a little bit, Cal? So practice that on simulator. Practice setting up those limit orders. Practice moving those stops and targets until it becomes very comfortable and very second nature for you. NG, your fibs don't match. 10 days loaded. Just did it again 5 minutes ago. That's a 13.2. That's a 13.2. Because this 13.2 isn't showing your synthetics. You're welcome. NG time. Your NinjaTrader 7 is showing synthetic time frame fibs. Your 13.2 is only showing native because we're not running tick data. So if you want your 13.2 with NinjaTrader 8 to show those synthetic fibs, you're going to have to draw a line and carry it over to the 13.2. Yep. So what I do, if I'm going to do this, I'll take my 21 NG and I'll draw the line on the 21 at all the support, all the resistance, and it'll carry over. And then that'll let me see it. And then since my 13.2 and my 5.1 are side by side, I don't bother doing it with that one. Does that make sense? And then Cal, just practice. Do the drawing, Claire? Claire's going to put me to work. Let me pull up my NinjaTrader 8 for you, Claire. No, I got you. Absolutely no worries. Guys, that 50-50 never went, did it? Small chart told you. Small chart said no thank you. And profit, it can be leveraged with multiple accounts like a trade copier. It can be, absolutely. Absolutely, Cam. If you scroll up and you look at Bobby T's post from a lot earlier, while these charts load, guys, this is my NinjaTrader 8 coming up lightning fast. Are you ready? I'm going to scroll up and see if I can find Bobby T's post from this morning, Cam. Almost there. And it's way up there this morning because Bobby T hit his goal early following rules. I love it. All right, here come my charts. All right, Cam, there you go. So Bobby T uses the trade copier across multiple accounts. He made $865 on each of his 4 accounts, which means he was up $3,200 for the day after making $865 in profit. Does that make sense? And that just kind of shows it right there. That's his trade multiplier. So that shows each individual account. He took trades on 1 account, but mirrored it on 4 altogether. So 865 times 4 accounts, which is right at what, almost $3,400. Here you go, Racha. Super easy on 7. Guys, if you're curious about how the trade multiplier works and everything, D, I'm not trying to shoot you down. I've never used it. If you go over to the trader chat in Discord, it'll help you out. All right. Racha, I'm going to help Claire real quick, and then if you're going to stick around for a minute, I'll show you how to roll it. But it rolls minis the same way it rolls the big ones. You just have to go to your... look at the instructions. You'll have it done by the time I'm done here. You too, Joel. All right, Claire, this is what I do. Is I can squish my chart, and I'll squish my 13.2. That is my 13.2. So let me move my 5.1 over. Get it out of the way. Let me move my 13.2 over. Make it big again. And then I'm going to find my... There's my 21. So Claire, what I'm going to do, NG, what I'm going to do is I'm going to squish down my 21 a little bit. And I'm just going to use F3. When I hit F3, it gives me a ray. I've made my rays to be blue. And I'm just going to flatten this out. And guys, it can be any color, right? But I'm going to put it where support is. And there's my ray. And there's my ray. And the lines that I put at support and resistance on my 21 will show up on my 13.2. So I have those synthetic fibs. That's all that you have to do. On that. Claire, it's really super easy. It doesn't matter what color. Whoops. It doesn't matter what color, right? If I put a line and it's red, but I put it at support, and everything's trading above it, don't I know that it's support anyway? Does that make sense? Guys, you could make these lines any color you want. It just doesn't matter. If you're trading above it, like if I make it snow, isn't that still support? Isn't that still resistance until all of my triggers get to the other side? So all you're doing is you're identifying these key areas on the 21 and you're pulling them over, taking the place of the synthetics. And then John says, if you have a supercomputer, then you can do supercomputer stuff. Did that help, Claire? I got the cool beans. Good. Yeah, so NG, so you're set if that's what you've been doing. No worries. Racha, are you with me? Yes, Sam. If you have 10 Apex accounts and you have a mirrored thing, it's going to all 10. Each account's its own. Racha, tools, instrument manager. You're looking for the micro ES, you said? So we're going to do MES and search. MES future, micro ES. There's your expiration. We'll highlight it. And I'm going to put it over into my instrument list. It's really that simple. So far, so good. Cool. I'm going to click OK. Let's get that out of the way. And then, Racha, all you have to do is go to your drop down and drop in that new symbol and the new expiration. And I put that link to the instructions too in case you need the visual. This is one of those things that when you do it once or twice, it's super easy. You're very welcome. And then Claire, we got your answer taken care of. NG, you're all good. Sam User, we just answered you. Did I miss anything? I think we got it. And guys, John's been running 8 with everything. John's smarter than me. He doesn't know it, but I'm going to overnight my computer to him and have him fix it. You guys don't tell him, please. Paul, what you got going on? Slow loading. $50.50 from a good top. Now, Paul, you say no divergence here, but that's not going to print until the third bar, right? We're looking for divergences here. Divergence, divergence. That's a big old window of opportunity on a 50-50, isn't it? What's your 13.2 say? Or your 13 range? Paul, your 13 range said don't do it. Don't do it, don't do it. Not yet. Be calm. Calmate. Didn't it? It didn't pull back to those triggers till 11 all the way up here. Yeah. Learning to use those tools a little bit helps. For sure. I like the idea. I think you could have used that 13 range just a little bit better on that stab back. Not necessarily. You've got your areas, right? You've got your window of opportunity. I look and see where these are. Where does it relate to? Where does this area relate to on this chart and the pullback and all that good stuff? I may have something I can send you about that. Guys, I think that's it for me. Did anybody learn anything today? I think I did. I think I'm managing trades a little bit better now. I think I'm starting to weigh out options, talk it through my head. Every day, guys, every day for the rest of your life, you're going to have an aha moment. So do me a favor. Every 5 or 6 days, you too, Safia. Every 5 or 6 days, compare what you did today to what you did last week. Because what you're going to do is you're going to be like, holy smokes, I'm so much smarter than I was. Awesome. And you did post today, Cam, and it didn't kill you, did it? You've got Apex waiting for you. Keep posting those charts. We'll talk about it all the time. Cam, one thing you can do me a favor. I love that you take 4 or 5 charts per trade. Give me the end chart and annotate it. We can go through multiples. I think it's great for you to have. But if you give me that end chart, we can cover everything without having to click on 4 of them. Keep taking 4 of them, right? The one with the final result. Like, you know how you have your charts labeled 1 of 4, 2 of 4? Give me 4 of 4. And we'll talk about everything that we see. We'll talk about everything pre-trade. We'll talk about where your entry was, why you did it. put your rules on that one, and you'll be able to get just as much information by only posting one in class. Keep all four for you. Take all four. I do the same thing, Cam. I take 5 or 6 pictures every trade that I'm in. But it's that end result, right? Because I know that I had odds favorable, and I know that I had 50-50, and I know that there were multiple divergences, and I know where my area for entry was. But when everything's done and the dust settles, I can see exactly why I did what I did, and we'll have that great conversation. Good stuff. That 50-50 didn't work, did it? Small chart said it. Guys, have an amazing afternoon. Go do some study. Ask some questions. Bring me some pictures tomorrow morning. And we will do this again tomorrow, 9 a.m. Looking forward to it.